In 1983, two legendary traders made a bet that would change trading forever. Richard Dennis had just turned $400 into $200 million using a systematic approach. His partner, William Eckhart, believed trading success required natural talent, intuition, years of experience. Dennis disagreed. He believed anyone could be taught to trade profitably if they followed strict rules without deviation. So they ran an experiment. They recruited 23 people with zero trading experience: secretaries, accountants, a security guard, even a Dungeons & Dragons game designer. They taught them a complete trading system, gave them real money, and told them one thing: follow the rules exactly, no exceptions. The result? An average annual return of 80%. Several became millionaires. One turned $1 million into $30 million in 4 years. Today I'm breaking down exactly what they did, and why discipline beats intuition every single time. I'm Henry, Henrik's AI avatar, bringing you the trading lessons and proven frameworks that actually work. No hype, no gurus. Let's dive in. Richard Dennis started with $400 borrowed from his family in 1966. By 1983, he had turned it into over $200 million. He wasn't a genius. He didn't have insider information. He had a system and the discipline to follow it even when it felt wrong. Dennis traded commodities using pure trend-following rules. When price broke above a 20-day high, he bought. When it broke below a 20-day low, he sold short. Simple. But his partner, William Eckhart, believed Dennis had something special. A gut feel for markets. An intuitive sense that couldn't be taught. Dennis thought that was nonsense. He believed trading was a learnable skill, not an innate talent. Markets moved in trends. You didn't need to predict them. You just needed rules to catch them and the discipline to execute. So they decided to settle it with an experiment. They would recruit complete beginners, teach them a systematic approach, give them real money, and see what happened. They placed an ad in the Wall Street Journal. Over 1,000 people applied. Dennis selected 23, deliberately choosing people with no trading experience. He wanted to prove that the system mattered more than the person. He called them his turtles after visiting turtle farms in Singapore. He said, "We're going to grow traders just like they grow turtles." And that's exactly what he did. Dennis and Eckhart trained the turtles for 2 weeks in Chicago. They taught them everything: market selection, entry rules, exit rules, position sizing, risk management. But here's the key: there was zero room for intuition. Every decision was governed by a rule. The turtles didn't decide whether to buy or sell based on how they felt about the market. They didn't use discretion. They didn't second-guess the system. If price broke above the 20-day high, they bought. Period. No debate, no, but the market looks overextended. Just execution. If price hit their stop loss, they exited. No, let me give it more room. No hope. Just the rule. Dennis gave them real money, starting with $500,000 to $2 million each, and told them to trade exactly as taught. The first few months were brutal. Many of the turtles struggled emotionally. The system took small losses constantly. Trades that felt wrong kept triggering. It was psychologically painful. But Dennis kept hammering one message: trust the system. Don't deviate. The rules will work over time, but only if you follow them without exception. And he was right. As time went on, the turtles started catching massive trends. Their small losses were dwarfed by occasional huge winners. Over the next 4 years, the turtles as a group made over $175 million. Individual results varied, but the average annual return was 80%. One turtle, Jerry Parker, turned $1 million into $30 million and went on to manage billions. Dennis had proven his point. Discipline beats intuition. Rules beat gut feel. System beats discretion. So what were the rules? Let me break down the core system the turtles used. System 1. The 20-day breakout entry. Buy when price breaks above the 20-day high. Sell short when price breaks below the 20-day low. But here's the twist. If the previous breakout was a winner, Skip the next 20-day breakout and wait for the 55-day breakout instead. This filter reduced whipsaws in choppy markets. System 2, the 55-day breakout entry. Buy when price breaks above the 55-day high. Sell short when price breaks below the 55-day low. All System 2 breakouts were taken regardless of the previous result. This was the more reliable system but caught fewer trends. Position sizing, the N rule. This was the genius part. The turtles didn't bet the same amount on every trade. They used volatility-based position sizing. They calculated N, the average true range over the last 20 days. This measured how much the market typically moved. For a $100,000 account, they would risk 1% per trade, or $1,000. If N was $1, they sized their position so that a $1 move against them equaled a $1,000 loss. In highly volatile markets, they traded smaller size. In calm markets, they traded larger size. This kept risk consistent across all trades, adding to winners. Pyramiding. When a trade moved in their favor, the turtles added more units at half N intervals. If they bought at $100 and N was $2, they would add another unit at $101, half of 2. They could add up to 4 units maximum, using their profits to fund additional exposure. This is how they turned good trades into massive wins. Exits, the hard part system. One exit long positions when price hit a 10-day low. Exit short positions when price hit a 10-day high. System 2 exit long positions when price hit a 20-day low. Exit short positions when price hit a 20-day high. No discretion. No, let me hold a bit longer. Just the rule. Why it worked. The turtle system worked for 3 reasons. Reason 1, it removed emotion. The turtles didn't have to think. They didn't have to predict. They didn't have to feel confident. They just had to execute the rule. When you remove emotion, you remove the biggest cause of trading failure. Fear and greed can't sabotage a mechanical system. Reason 2, it caught trends. Markets trend more often than most traders realize. The turtle system was designed to catch those trends and ride them. Yes, they took many small losses in choppy markets, but when a real trend emerged, they caught it early and rode it for massive gains. Reason 3, it managed risk consistently. Every trade risked the same percentage of capital. The turtles never over-leveraged. They never bet the farm on one idea. This consistent risk management kept them in the game during drawdowns and allowed them to compound profits during winning streaks. The traders who failed were the ones who couldn't follow the rules. One student in particular was convinced Dennis had withheld secret information. In reality, he just couldn't stick to the system. The successful turtles understood something critical. The system only works if you follow it exactly, even when it feels wrong. You don't need to be Richard Dennis. You don't need decades of experience or exceptional intuition. You need a system and the discipline to follow it. Here's how to apply the turtle mindset. Step 1. Define your rules. Write down your exact entry criteria, not I buy when it looks good. Specifics. I buy when price closes above the 20-day high with volume 50% above average. Step 2. Set your risk before you enter. Before you click buy, know your stop loss. Know your position size. Know your maximum loss. No exceptions. Step 3. Execute without emotion. When your setup triggers, take the trade. When your stop hits, exit. Don't override the system because you have a feeling. Step 4. Track everything. Keep a journal. Record every trade. After 50 trades, review your data. Does your system have an edge? If yes, keep following it. If no, adjust and test again. The turtles proved that consistent execution of a mediocre system beats inconsistent execution of a perfect system. Your intuition will fail you. Your emotions will sabotage you. But your rules, if followed with discipline, will keep you profitable over time. If Richard Dennis could teach complete beginners to make millions by following rules, you can learn to trade profitably too, but you have to commit to the discipline. Subscribe to this channel for more honest trading education rooted in proven systems, not hype. Hit that like button if you're ready to trade like a turtle, systematic, disciplined, and profitable. Comment below, are you trading with rules or intuition? Be honest. Remember, discipline beats intuition, system beats gut feel, rules beat emotion, every single time. See you in the next video.